Hi, this is Barnacle Bill the Trader. Let's see, this is my video journal for Monday, October 27th, for Big Mike's trading forum. A couple of days ago on the forum, I put on several of my journals and checklists that I use for the market, and this is my second video to show you how to use it. So this is for the 27th, the ES. And first thing I'd like to find out is, are there any announcements scheduled for the next day? So I have several places that I look at for announcements, but one of them is Econo Day. And on, let's see, the 27th, usually the orange and red stars are pretty important. So you see this Wednesday, we have a FOMC meeting. But for Monday, we have pending home sales at 10 and Dallas Fed at 10:30. So I just write that in here. A lot of times I don't even write what it is, just the time so I know. So I'm going to show you how I use this to look at the market. Much of this is, you will find, has market profile terminology. If you're not familiar with market profile, I suggest that you get Dalton's book, Mind Over Markets, Jim Dalton's. He also has a website and a lot of great training. So I highly recommend it. So I start out from the top-down approach, starting at the monthly. So what we're going to look at the monthly is that we have broken this channel. Let me get this out of the way. We've broken this channel, but we have not broken this 20 EMA. If you notice on this down move here, we've had a lot of volume. And if you look back to where we've had that much volume, it's been on this down day. I would imagine that a lot of people here thought that we were moving lower, but we just kept chugging higher. Is that what's going to happen here? I'm not sure. If you notice, before this day, you can see that these months were rising, and we're rising with higher volume. We had an excess here and a down month, and I just had the feeling that people just thought it was going down. They loaded for bear to get short, and it just wasn't happening yet. So on top of all this, now we have some people short, so it just kept going up. Here we have a different situation. We're rising up here with low volume, and we on this, even though we have a lot of excess here, we certainly could shoot higher. There's no doubt. But this just may be a big warning sign, because something has changed. We out of all these months, we have finally broken this channel. So let's fill out our sheet, see what we can find. So monthly, if we are truly breaking the trend and starting a new trend down, then we are early in the process. If we're going to continue higher, then we're very long in the tooth. So what we have done here is we had a 2-month balance, right? It broke down out of that balance. You could say a 3 or 4 month balance, actually. We broke down out of that balance and we re-entered that balance. So that's why I put re-entered balance here. Right now we're one time framing down, but it's just the first month, and it looks like it's coming back. So we have a couple days. It's not over yet. We can still hit new highs. So just in reading this, I listed it as a positive. anytime you re-enter balance, your target is the other side of that balance. So that could be a new high. So let's look at the weekly. The weekly, I put re-entering a balance also. So we're re-entering this balance area. We stopped one time framing down. So if you start from this week, 1, 2, 3, 4 weeks, we're one time framing down. Left a pretty good tail on that. So that all bodes for positive. On the daily, I put it late, and I wanted to highlight location where we're at. Let's take a look at the daily. So the daily, we broke this downtrend. We've broken this downtrend, but as you can see, we're coming up underneath the bottom of the channel. So are we just retracing to the bottom of this channel and going lower? I don't know. We're running into the 89 day moving average. We're coming into this balance area here. Something else I want to point out is this is the 4-hour, and this is the volume for this whole chart. And you can see that this volume node shows that we've spent a lot of time here, and we've broken down from this area and come up twice and haven't been able to break it. And so in the daily, that's what I want to show everyone, is the location. We are in a location where it's our greatest risk is being long. So a couple other things that I want to point out here is that from these two areas right here, we broke down strong. And you know, that's the 60 to 70 area, 1960 to 1970, and we're right knocking on its door. So let's go back to our chart. On the daily, I put it late because it's 1, 2, 3, 4, 5, 6, 7 days in a row we're one time framing up. This was a down day, but it's still one time framed up. We're so that's how I fill this out, one time framing up, which is a positive. And I want to make a note of the location because we're in the 60 to 70 area, bottom of the channel, several things that coming together. So the greatest risk, I believe, right now is being long, and that's a negative. The volume confidence going up is low to average. The value, did the value move up with price, or did it not move up with price? Well, let's take a look at the market profile. The day before, Thursday's value area was right here. We're overlapping to higher. So that's positive. It's neutral. Neutral to positive. So value moves with price. Let me get rid of this right here. So that's a neutral. It's balanced to higher. Okay. Previous days inventory. I believe that the inventory is long. After 7 days in a row up, you can only imagine that inventory is probably pretty long. Also, what I want to point out here is until the 2 o'clock hour, this is where the fairest value was for prices. So after 2 o'clock, it started moving up, and I believe that this whole area up here, that they bought at high prices. So not only do I believe that our inventory is long, I believe that these people have bought at high prices. So I'm thinking that very shortly we're going to have a turnaround. Could be brief, could be long, I don't know, but I believe that we're going to have a turnaround because we're long. Our location bought at poor prices. So previous day's inventory, I put long. Extremes. The extreme from this day was that we had an excess low. So that's what I put here, excess low. That's a positive. And then the fairest price to do business, or anomalies. Even though it's not technically it's not a 45 degree, I believe for the same reasons these people have bought it poor prices, that it has the same effect. So I'm looking for a turnaround. Maybe it's not on Monday, maybe it's not on Tuesday. If we blow by that 60 to 70 range, then I'm dead wrong. We're going to look at overnight inventory in the morning and see if there's a new location that we should be aware of. If it opens in balance, are we in the center of that balance? Are we at one of the extremes? If we don't spend some time close to at this spike up here that we had on Friday, then is that area considered being rejected? We have 3 scenarios in the morning. If it opens up in balance, we can look outside and fail. We can look outside and keep going. But since we're opening in balance, we could just rotate there. If we open with a gap, is that gap pretty far away? If it is, it's more likely to keep going. If it's close, are we going to just look inside the balance and then keep going north? Are we going to go back in balance and then the target is the opposite extreme of the balance? So or are we just going to gap open, just take off? If we gap open and take off past that 60, 70 level, I'm looking for new highs. So as the day goes forward, the first destination, is it going to be this was from a previous day. I got to get rid of that. Is it going to be, overnight? Is it going to be previous day extremes? So you have to look at that and the participants and the confidence of the moves. And hopefully in another video we can get into that. All right. Thanks for your patience. And I hope you have a great trading day.